Welcome to Upticks. I'm Jake Falcon, the founder of Falcon Wealth Advisors and your host of Upticks. Today is episode 158, 10 Financial Mistakes to Avoid. Cory, thank you for having me, or thank you for being back on the show. I guess you haven't had me on your show, which maybe that was my subtle way of saying I need to be on your show.
Understood. Yep. That was the slip there, but I got it. Thanks for having me.
You're welcome.
We'll have you back on In the Money Insights soon.
Good. I look forward to that. You know, it's been 10 episodes since we've had you on Upticks. What have you been up to?
You know, it is, we've just kind of been rocking and rolling here. Summer's come and gone. Took a trip to California with my wife, caught a breakthrough COVID infection, but got over it just fine, very manageable. So I'm just happy to be here and back at it.
Good. I'm glad you're healthy. And we hope all of you out there are staying healthy and safe. For today's topic, we kind of want to kick it off here. We want to go over literally 10 financial mistakes to avoid almost at all costs. Like some of these things we can correct and get you back on the right road, but these are some pretty big mistakes that we've seen or heard of other people making before they come see us at Falcon Wealth Advisors. And these are things that we talk about with our clients to make sure they avoid them. Okay, so Cory, you being the guest, I'll let you start off with number 10.
So tip number 10 is paying high fees. And paying high fees, what I'm referring to specifically, ultimately, if you are going to pay someone to manage money, handle the financial planning, et cetera, for you, in all reality, there's going to be a charge. However, there are a lot of folks out there that have, that charge excessive fees, frankly. And I think what I was referring to specifically as far as this tip goes, is that if someone's paying an advisor an asset management fee or an investment advisory fee, that advisor should ultimately be managing that money. And if someone is paying an advisor to buy them products that charge fees also, those are the excessive fees that I'm referring to that can be eliminated, which ultimately helps returns.
Right, exactly. So if you're not working with Falcon Wealth Advisors and you have a financial advisor, I encourage you to ask them, hey, are you charging me on my assets a percentage, which most advisors do? And if so, are you using products? And then what are the products charging on top of that? See, at Falcon Wealth Advisors, we're very transparent with our structure. So again, we're not hiring outside money managers, mutual funds, index funds, annuities to do it. And that cuts out the middleman. Very good. So I'll go into number 9 is not having a financial plan. Huge mistake, right? And again, I kind of get on my soapbox here a little bit with this, Cory, but a financial plan is not a roadmap. So I'm not suggesting you have your next 30, 40, 50 years all mapped out. To me, that would be silly, actually. But the idea is that you want to have something on file with a chartered retirement planning counselor, such as you or myself, to look at these projections. And maybe even more importantly than not having a plan, it's regularly reviewing that plan. So again, make sure you've got a financial plan. We do that with most all of our clients at Falcon Wealth. There's a very small subset that maybe for whatever reason, they don't think they need one. We think they need one. So again, we work hard to get a financial plan on file for pretty much all of our clients. And it's very important that you have one and that you review it. Cory, what's number 8?
Number 8 is no concept of expenses, not having any concept of expenses, I should say. And just to your point, Jake, about developing a written financial plan, which is important, understanding what your expenses in retirement will be, and knowing that we can't know for the next 30 years, of course. But when you're planning for retirement and making that transition, when the paychecks go away, you need to have a concept of what your spending needs are. And I'm not suggesting that everyone out there needs to go down and, break out their budget by every individual line item, down to every $1 or $2. I'm not suggesting that. It's just, if nothing else, I think the easiest way for someone to do this is just to evaluate and track what they spend money on, because more than anything, the conversations that I've had with people before that feel like they, maybe didn't totally have their arms around what their expenses look like in retirement is they neglected to think about some of the, the big annual expenses or some of the stuff that, pops up unplanned for. We can ultimately take all of that into consideration when we're looking at your financial plan for your retirement, but we need to start by having a good idea of how much money you need to maintain your lifestyle.
Have you used that? So we've got a new financial planning software. It's not really new. It's newer to our clients.
Yep.
We've been using it. Have you geeked out on that yet and plugged in all of your stuff?
I have not. I've actually been working with Joe here on our team, who is one of the financial planners that joins me
Yeah,
in a
I
lot
know.
of
I know
meetings.
who
We're going
Joe
to build
is.
it out.
So,
Yeah. Well, I know you do,
so,
but no, the short answer is no.
hold on. So I highly encourage you to do this because I've really, really geeked out on it and it is awesome. So what I'm talking about is if you're a client of a client of Falcon Wealth Advisors, we have this new financial planning software that we're using, and you can plug in. So what's great is you don't have to run your own spreadsheet, right? I literally just linked up my checking account, linked up my credit card, linked up my Charles Schwab accounts, and it automatically categorized all of my expenses. And then I could go in there and clean it up. But then I've got this wonderful donut chart basically showing how much I'm spending on my mortgage relative to my overall expenses and how much I'm spending on golf and how much Rachel and I were laughing yesterday, how much she spends on books. So again, Cory, shame on you. Just kidding.
Shame on me.
But we've got so if you're a client of Falcon Wealth Advisors, let me know because we can get you plugged into that. And it's really, really cool. So very good, Cory. Number 7 is having bad investments. I think the media and with COVID has romanticized investing, and people think all of a sudden that they need to be getting in cryptocurrencies or these meme stocks or pot stocks or whatever. And it doesn't really make sense in their overall portfolio allocation. It's gambling, it's playing the lottery, and that's not what we do at Falcon Wealth Advisors. That's not the substance of a well thought out retirement plan and investment strategy. I get it. If you want to have some fun and speculate, that's fine. Just like I don't judge my clients that go to the casino. I'm not going to judge you if you go buy crypto or buy pot stocks, but I am going to have a problem if you're pulling your IRA and using money that we've already earmarked for a specific goal and investing in that. So again, be careful on the bad investments. Don't go chase the hot stock. It's silly. Cory, what's number 6?
Number 6 is deferring all taxes. What I'm referring to specifically here is tax diversification in retirement and the different buckets of money that you have access to. For a long time now, really since the introduction of the 401k plan that's allowed people to make contributions to a 401k tax deferred to lower their taxable income, people have taken advantage of it. And it's a great vehicle and it's a great tool for people to use to save. Oftentimes, a lot of companies will provide a company match, and the money that they match is free money. However, now that the rules have changed around not only required minimum distributions, but more specifically, even thinking about the way that clients' beneficiaries are going to have to take distributions from retirement accounts, we're seeing more and more people and having more and more conversations around, diversifying someone's taxes. When what that might look like is, Roth conversions, or if someone is still working, making contributions to Roth accounts, saving money in a taxable account, rather than just putting everything into the 401k plan before tax and assuming that your tax bracket will be lower in retirement. We're starting to see that logic is kind of getting flipped on its head a bit.
All right, good. So very good, Cory. So again, an IRA or a 401k, a Roth, and after tax is what you're getting at. You want to diversify your taxes in there when you're saving. Perfect. So number 5 is transfer or rollover mistakes. We've seen this before, right, Cory, where people come to us and they may have cashed out an old 401k and they pay taxes and penalties on that. Or if you're, getting a pension and you make the wrong election on the form and submit it, you could literally cost yourself thousands and thousands of dollars just by making a transfer mistake. I'm really proud at Falcon Wealth Advisors. As you know, Cory, we've got a teammate, Abby, who specializes in rollovers and opening up accounts and doing all that onboarding. So we want to make sure we're doing that right for our clients. So just know that you don't have to go at it alone. Before we go into number 4, I want to do a quick plug, Cory, for your show, In the Money Insight. Again, Cory, I don't know why you haven't had me on in a long time, but hopefully now I've invited myself, I'll get on there. So Cory's show comes out weekly, just like Upticks. It's on this same YouTube channel, and it's also on your favorite podcast platform. Scott, our other advisor, has 2 shows, actually. He's got a show called Mental Dividends, which is very similar to In the Money Insight and Upticks. And he's got a fun show that he's doing with Josh Briscoe over at 810 AM radio, sports radio, called Sports and Money. All right, Cory. So what's our number 4 financial mistake to avoid?
Number 4 is paying yourself last. And this might be something that you've heard about before, but the whole idea, especially while you're working, and you're saving for retirement is to make sure that you're paying yourself first. And when I say paying yourself first, the way that I think about that is, the money that you're ultimately going to save and invest, regardless of what type of account that you do it in, that should almost be viewed as or thought about another expense, right? And that's the very first line item that should come out. That should be the very first line item that comes out of your income, out of your pay, is to pay yourself first.
That's a good one. That's a really good point. So don't think of your 401k as the last thing on the balance sheet. You should be putting it up to the top, right there with your electric bill, right? You're saying it's that important.
Exactly. And I also think too that we're, humans, we're generous, right? That's another thing when we think about friends, family, whomever it might be. It's great to be able to help those people out. Or I see with clients sometimes kids and grandkids paying for them to go to college. Educations just continue to get more and more expensive.
Right.
There's nothing wrong with doing that, but you don't want to sacrifice your own retirement at the expense of it.
Good. All right. So we're getting down to the important ones here. So I'll do a quick.
They're all important, but the really important ones. I said they're all important.
Yeah, good.
They're really important ones.
All financial mistakes to avoid. So again, just a quick recap. Number 10, don't pay high fees. If you've got another advice, certainly if you're with Falcon Wealth Advisors, we actually go over the cost of our services at every review with our clients. We think that's just the right thing to do. But again, we're not outsourcing it. So we're not using third-party money managers. Don't do that. If you're working with a competent financial advisor, they either should be willing to do it or they shouldn't be charging you the way that they are. Number 9 is not having a financial plan. Maybe that's table stakes. Everyone should know that, I would think. Number 8, like you said, Cory, no concept of expenses. You got to be aware of your budget. If you want to have I know you keep a spreadsheet, so maybe I'll take back my shame on you because you got
That's
really
right. I can live with it.
You got really. Do you still have your spreadsheet?
I do.
Okay, good. So you are doing it. So maybe I should say. But this new software for guys like me, I don't like spreadsheets. And again, I'm not looking at staring at Microsoft Excel or whatever. It wasn't. And I'm not that old, but it wasn't that big of a deal in college as it is for some of the younger guys. So, but again, I use the tool now, right? So I just link up my accounts and then I can pull it up every day and I can see exactly where I'm spending money, which is really
that requires
cool.
a lot less data entry than mine.
Yeah, absolutely. Absolutely. It's probably more accurate too. Number 7 is having bad investments, right? Don't go chase the hot stock. Number 6, deferring all your taxes. Cory's talking about a bucketing strategy. Do some pre-tax, do some Roth, do some after tax. Number 5, transfer or rollover mistakes. Again, work with somebody that's done it before. And then number 4, don't put your 401k at the bottom of your expenses. Put it at the top. Good one there on Cory. And the third one that I'll discuss is fear and greed. You've probably heard me talk about this before on an episode of Upticks. Right now, the market's been shaky a little bit. There's some things going on in China, Afghanistan, right? Taxes may go up. What is the Fed going to do? COVID obviously is horrible, this Delta variant, but we're not letting fear dictate our investment decisions. That's probably one of the worst things you can do. And just conversely, the market's had a great run the last 3 years. We're also not getting greedy and getting overexposed, right? So you want to have a disciplined investment strategy. Our strategy happens to come from the University of Pennsylvania's Wharton School. We have discipline, we stay to it. And again, we know it works. So we're rebalancing, we're doing things that all based on math, and we're not letting our emotions nor our clients' emotions get in the way of a well thought out financial plan and investment strategy. Quick plug, if you haven't, before we go into number 2, Cory, if you haven't already subscribed, I don't know where he puts it, maybe he puts it up here. Anyways, mash that subscribe button. Our subscriber count continues to grow. Thank you so much for tuning in to Upticks. So again, the best way to make sure you don't miss an episode is to subscribe. So please do so. Thumbs up if you think this show is good and our content is good. That's another way for people to see it, I think. Cory, what's number 2?
Number 2 is under or over insuring. And when we talk about overinsuring or underinsuring, Jake, and if you want to chime in here, feel free. The way that I think about that for clients is, again, not especially as far as being underinsured goes. Sometimes people don't understand, even if it just comes down to, property and casualty insurance, their homeowners insurance, their auto insurance. They don't necessarily understand what the potential liability they could be facing is if, something horrible happened. Or on the flip side, thinking about life insurance, that's another piece. For a lot of our clients, when they're making that transition into retirement, they've worked hard, they saved their money, they've paid a lot of debt down. Sometimes people don't need to have, they don't need to have so much life insurance. Some people don't even need life insurance, period, when they're retired. But making sure that you have the right coverage is one piece of it. And then secondly, making sure that you have not only the right dollar amounts, but the right type of coverage. Because when insurance is oftentimes sold as an investment vehicle, and we know that that's the case. If you want or need to invest your money, you can just go and do that. You don't need an insurance product to do it. But most importantly, you want to make sure that you have the right type of coverage and the right dollar amounts in place.
Right. And health insurance is part of that as well. So again, some
Good point.
people don't understand health insurance and they might want to just self-insure, which I think is rather risky. You got to have something on there, right? So you just want to make sure you've got your health insurance, property casualty, like you mentioned, and then life insurance. We can review that for you at Falcon Wealth Advisors. You and I are both licensed life insurance agents. We don't do a lot of it, obviously, but we know the industry. And if we need to get another professional involved, we certainly can refer that out and bring somebody in. All right, very good. Ready for number one? You want a drum roll, Cory?
I don't know if you can hear that or not. Let's hear it. What's number one?
Your screen was shaking. So number one, which I think is I do think this one's most important, is not knowing your purpose, right? So this is a much deeper philosophical thought, but as you transition, whether that's getting a new job, retiring, getting married, buying a home, you want to think deeper beyond the finances and understand, what is my purpose? What do I want this hard-earned, saved capital to do for me, so that you can avoid making a financial mistake? I'll tell you, if you're just going through life, aimlessly going to Starbucks, or maybe you, again, not a lot of people are working, but maybe you're buying stuff on Amazon, or, again, you're drinking coffee and you might not even like coffee, right? But this is just this habit loop that you've developed over years, and it's not truly what you enjoy doing. Then you got to think about those things and redirect your life and spend that capital towards things that you do enjoy doing. And that's what I'm getting at, because I think just as human, it's human nature to get into these bad habits and just aimlessly spend money on things that maybe we don't value. So again, if you know your purpose, then you can align your values to that purpose, and then you can align your finances to those values, to that purpose. And to me, that's a very, very solid way to go through life, right? Rather than just blowing money on random stuff and not really understanding it, or thinking that money, you and I talked about this the other day, that money is going to solve your problems, because it's not. Because you got to have that purpose figured out, get your values aligned to that purpose, and then we can line up that capital to those values. So what I'm talking about, maybe charitable giving is important to you. We should put that in the plan. Maybe taking care of your kids or grandkids, right? Maybe buying a Porsche 911 is something you've always wanted, right? And that's okay too, right? Or a second or third or fourth home. All those things are fine. But again, you want to understand your purpose, you want to align your values, then you want to line up your financial plan. And that's what we're here to do at Falcon Wealth Advisors. We take it beyond just the numbers crunching of it. We want to help you, guide you, and inspire you to do those things that maybe you haven't even thought about.
And if I may just quickly add to that, Jake, I had a great conversation with a prospective client this week about just that. And we talked about how, and really this kind of ties all 10 of these things together, but especially the one you're referring to right now, about having your purpose and thinking about what, your life is going to look like when you don't work anymore. What's going to get you out of bed in the morning? What's going to keep you moving? What is important to you? And we had the conversation about how most people, the goal is to retire one time, right, in their life.
Right.
And our team, you and I, and the rest of our team here, we work with over 600 families around the country to help them plan for and transition into retirement comfortably. So when we talk about these things, really, from my perspective, one of the main reasons that we do is because we've seen what happens, right? We've seen people make good decisions. We've seen people make decisions that they end up wish they would have handled differently. And we can still talk through those things with them. But I've had plenty of clients over the years share advice with me where they're like, yeah, if I would have known this or that, or I'm really glad I did this, whatever it might be, we can ultimately help guide you to thinking through those things for you and your family and your situation, because we have experience in working with other people when they make that transition into retirement.
Perfect. Yeah. Thank you for sharing me. That's all the time that we do have for you today. Cory, you and I got to run. Got to meet with our team, but thank you so much for tuning in. Hope all of you out there are staying safe and healthy. If you're not already connected on Facebook, Twitter, Instagram, LinkedIn, I'm out there. My team, Falcon Wealth Advisors, is out there as well. Cory, thanks for joining me, and we hope all of you have a great week.
Thank you.